Until recently, seller finance or owner will carry ads targeted the riskiest buyers and sold the least attractive homes. This is certainly no longer the case, as seller finance emerges as a mainstream financing method. Today, even motivated million-dollar homeowners, along with developers and realtors, are offering seller finance to broaden the number of prospective buyers coming through their property. Hi, I'm Ken Moll, president of GGB Capital in San Francisco, and I'm a note professional. My job is to try to help sellers and buyers utilize seller financing in today's real estate market. The most important condition to qualify for seller financing is that the seller has to have some positive equity in the home. But if a seller has positive equity, and you got to remember that almost 78% or 80% of the population still have positive equity, notwithstanding the downturns in the market, they have an opportunity to offer seller financing if they have the need and if they have the appetite for the risk. Seller financing has grown significantly over the past 5 years. If you look back 3 years ago, they estimated that 1 in 400 mortgages utilize seller financing. That's a very small percentage. If you look at the end of 2008, they're estimating that 1 in 50 homes utilize seller financing. That's 2% market share. And now some realtors and some specialists are suggesting that in the next year or two, that number could grow to 1 in 10. Seller financing really began back in the early 1980s when the prime rate rocketed up to about 20% and mortgage rates peaked at over 18%. And people needed a solution. People needed an alternative in order to bring buyers and sellers to the table. We're at the same exact place today as we were back in the early 80s, except interest rates aren't at 20%, but we now have lenders who are no longer willing to lend regardless of what the rates are. They estimate that roughly 50, maybe even as high as 70% of the buyers that could qualify for conventional financing 3 years ago can't qualify today. That leaves a huge number of people that can't get into the market, that can't find a way in the market through conventional lenders. So the purpose then of using a note professional is to help buyers and sellers walk through the process so they understand what's involved, they understand what information they need to gather, they understand really from beginning to end what's required to put a good transaction together. What we see in most seller finance advertisements in the newspapers and on the internet for people that don't have experience is no credit, no problem. Our experience with those types of ads is that they bring through truly the marginalized borrower, those people that really don't have the quality of credit that anyone would really want to lend to. If you advertise seller financing for qualified buyers, those are really the types of individuals that you want responding because they've already screened themselves. They've already determined themselves that they meet the expected qualifications that sellers and realtors are looking for. What's important when you look at conducting due diligence is to consider what the creditworthiness of your buyer is. That's fundamental. Within that process, one has to follow the 5 C's of good credit lending. Those 5 C's include 1. Character, the buyer's good intentions. 2. Credit, the buyer's historical track record. 3. Capital, the buyer's skin in the game, that is what we would call loan to equity. 4. The buyer's capacity, that is the percent of income allocated to debt servicing, also known as the debt to income ratio. And 5. The quality of the collateral, and that's the buyer's upkeep and maintenance of the property. One has to trust but verify. In short, the seller needs to begin to think like a lender and not like a landlord. Well, they estimate that probably 75% of the notes that are currently existing in today's market have some flaw attached to them. If you were to look at the history of notes and the types of notes that are out in the market, it's astounding that many of the sellers never even pull a credit report. Not all note holders want to sell the note, but some percentage of note holders will look to sell the note over time. It may be 2 months from now, it may be 2 years from now, it may be 10 years from now. but financial circumstances change, their needs change. There's actually a very well-defined market for notes. There are a number of private capital investors. They all have different things that they're looking for. They look for different property types. They look for different seasoning, for different credit quality. They look for different structures. So all of those affect the value of the note. All of those affect the discount that would be applied to the note if the note holder would look to sell it at a later date. My responsibility is really twofold in dealing with the creation of a note. The first is to make certain that the due diligence is conducted thoroughly and comprehensively so that there are no flaws or gaps in the documentation, so that everything has been done correctly, and that if there is an exception, we've really identified and accepted it as an exception in the process. The second role that I play is making certain that I know and can share with the note holder or one of their representatives, such as a realtor that they might be dealing with, that we know what's going on in the market at any one time. We know what investors are looking for in terms of the quality of notes, in terms of the location, in terms of the documentation and the seasoning and the property type. So that is all important information that factors quite significantly into what the ultimate value of that note will be. I think in today's market, a realtor needs any competitive edge they can possibly find. Retaining the services of a note professional is really a win-win for all parties, because in today's market you need to bring every qualified buyer through and looking at the property that you possibly can. We're very excited about the future of seller finance and how it can help bring sellers and buyers together in today's difficult market environment. Today, it's becoming a very mainstream financial tool, and the opportunities are enormous. We stand ready as a trusted advisor and consultant to answer your questions and help you utilize seller finance.